Gold Show for your Wednesday afternoon edition. More pain in the market. Bad day for me from a trading perspective. I had to real quickly this morning buy some protection against some of my positions. But yeah, it was a rough one out there. Things just kind of kept on sliding for the positions that I was in. We'll talk about that as we progress here today. I see a lot of new names in the crowd. Welcome back. And welcome back, Liz. Hope you got some nice little suntan there before you went to your cold 50-degree environment. Yeah, it's 80, I think 83 or 84 out here in SoCal today, so I'm pretty happy about that. I don't know how cold it is for Gus out there in Lincoln, Nebraska. My guess is pretty darn cold. Every time I went through Nebraska, it always seemed to be pretty darn chilly. Low volume again, I mean? Let me see if I can fix that, Dan. Sometimes the microphone resets itself, and I only know that if you guys... Yep, totally down. Thank you very much, Dan. So my microphone is always 100%. I did a show today with a gentleman named Marshall Silver. You guys might know Marshall Silver, kind of a famous hypnotist. And some reason when I do other shows, it capitalizes my microphone and then drops the volume. It was at 29%. So there we go. Much better. Thank you, Dan, for that. Let me dive right in with the topic du jour. I'm going to spend a bit of time discussing this today because it seems like I'm getting, at least in the past 48 hours, a ton of questions on this. And I think the regulars kind of know my perspective of where I think things are going. But I'll read through you three questions. There were three questions that came in on this one specific topic, so I'm going to address it. The title for today's show is, will the crypto meltdown continue? One of the questions from Thomas was, I'm worried that Bitcoin is going to drop further. What are your thoughts? Okay. The second question was from Scott, which says, what's your updated target for Bitcoin now? And then third was from Gene, says, is now a good time to buy Ethereum or Solana? Okay, so let's start kind of higher level. Its foundational piece is the 4-year cycle, which is driving everything. And I did not think that we would see a full 4-year cycle pain like we normally do. For those who are new, I can show you two very briefly here because I'm sure my regulars are getting so sick of seeing this chart. But if I go out and show you, let's say, a weekly time frame of Bitcoin, hopefully I still have it mapped out here. Well, I don't. You'll notice that every 4 years, there is a huge surge up, and then there's a 12-month rotation where things drop significantly. So here is your, this was 18 months. Bitcoin actually dropped 93% from 2001 to 2000 in a year. Then it surged up again. You have this huge market rally, continues to rip up, and then you get, let's see, I got to make sure I got my weeklies here. You get this giant move here, which from 2013, for about a year, we fell 66%. You can stretch that even further, drop to 86% in 59 weeks. That's a little bit longer than normal, but normally it's normally you're going to get about 52 weeks worth of drop off. Now, if I make this a monthly, which is going to make it easier for all of us, let's go monthly. Bear with me as I dial all this bad stuff in here. So here's your monthly. I just drew that one. That's your first year of a 4-year cycle. And here we are again with the first year of a 4-year cycle. This one went a little bit longer, started in 2013 and went to the low point there in 2015. That was an 86% drop. Okay, we fast forward to the end of this 4-year cycle, which was, let's see if that was 13, we go to 18. So let's go to 18 and drop there. In 12 months, it fell 84%. So you got an 86% drop, 84% drop. Then we go to the, since this one was 2017, let's go to the 21 version, which was from November of 2021 till November of 2022. That was a 77% decline. And here we are now in the midst of the beginning of a 4-year cycle. So patterns are really important. They definitely help us understand market behavior, and just for whatever reason it's moving down, it's moving down. So based off that, I mapped out a 70% decline because it seems like it's dropping a little bit. It was like 90-something and 86 and 84 and then 77. So I put 70% target here as a pullback overall. And of course that, for those who are paying attention, brings us to right around $37,000 for the price per Bitcoin. Now, none of us, well, except for Les put a forecast on Bitcoin of $10,000. Les, really, you're going to profit on the demise of my crypto portfolio, but stranger things have happened. As Atticus says, I thought it'd be different this time. It may be, right? Let's not jump to conclusions yet. So far, it is absolutely following the script of the 4-year cycle, which has me scratching my head because, as Atticus said, I believe that this is going to be a very different time, given the political structure, not only just the laws, forget about the president, forget about the Treasury and the SEC, but just the laws being formulated around crypto seem to be benefiting. Now, when I was on with Marshall Silver today, Marshall Silver was talking about how he thinks that they will ban crypto in a few years once the government sets up their own digital currency. And that may actually be, yeah. Wait, Bless, I even sent you an email, said, are you sure you want 10,000 as your target for Bitcoin? And I thought you responded yes. Maybe I'm wrong. You can type in your actual forecast for Bitcoin. I thought 10,000 might be a little bit low for you, bud. But hey, it's not impossible. Why didn't it follow it to the upside? Good question, Louise. And I think that there are different drivers this time. If you look at since 2009 when Bitcoin was created, the real crux of why it behaved the way it did was no institution involvement. You did not have institutional involvement in Bitcoin back in 2009, 10, 11, 12, 13, 14, 15, 16. It started to get to 2017. You got real kind of big commercial exchanges like Coinbase, right, and Binance. So now you have bigger players, but still kind of directional. As soon as you get to 2021, 2022, we started to see the ETFs come into the marketplace, which now gave people the opportunity to short the market. So we have a whole new variable. Before that, you really couldn't short crypto. You could through decentralized exchanges, but it was very hard to do. Now we have shorting abilities. Not only do we have spot Bitcoin, and again, I'm using Bitcoin as a generality for all of crypto, but you guys can imagine this is for Solana, Ethereum, and many things else. So we can now, as we get into the mid-2020s, we can now short Bitcoin. We can now use leveraged products, which you couldn't really use before. Leveraged futures products. You have structured projects or products on the CME, right? You have Bitcoin futures, you have Ethereum futures that are large contracts that now can be used by institutions to short the market. All they have to do is hit a sell button and they can be shorting Bitcoin. You also have institutional involvement on leverage markets where people are using 100 or even more leverage on Bitcoin to push markets up and down. So I think what happened in that, Luis, was when we had all these forces that now allowed you to sell and buy at the same time and short, I think that reduced the cap, the peak. So I think that the target, which should have been right around 250,000 according to my calculation, changed things. I think the new market participants, the institutions coming in, changed it. Now remember, the institutions are going to want to capitalize on it and make money off of crypto, period. Whatever crypto it is, doesn't matter. Their goal is to make money. They don't care whether it's real or fake. Just let them make money. It's my belief that they're going to end up manipulating this market a bit more. And what I mean by that is I think at some point we'll have some pretty exaggerated runs that are facilitated and pushed by big money. You know, as big as my accounts are, I'm not going to go out there and buy a $50 billion position in Bitcoin or Ethereum. But somebody like JP Morgan or BlackRock could very easily go and throw a lot of money around using 100 to 1, 1,000 to 1 leverage and manipulate that market to the upside to create buyers or to slam it down like I think we are getting right now. I feel like this is institutional. So right now, off of our peak, let's just go see where we are now from Bitcoin's price point to where we closed at today. We're already down 43% in 4 months. That's savage. That's brutal. And I think that the way that I'm seeing questions come in here and also panic on social media tells me they've reached their objective, which is create panic selling. Create moments where the retail population who doesn't have, I would say the majority doesn't have the skill set to be a successful trader, they're going to get washed out. They're going to end up selling their shares. They'll get out. And that allows these institutions and bigger players who are manipulating things to buy back in at lower prices and move things back to the upside. So for now, going back to Thomas's question, I'm worried about Bitcoin is going to go drop further. What are your thoughts? Looking at the price chart and looking at where things have been headed, I would agree. I do think that there is a much higher probability, and that's all I base my trades off of is probability. I've been talking about this lower level here on Bitcoin, saying that we should bounce around 74. I've also been saying that if we get a close down below 74,000, which, as you can witness here today, we got our close below 74,000. We're all the way down to 72,000 right now, and who knows, by the end of the show, we could be down to 70,000 the way this thing is dropping. If that, in fact, is the case, momentum is certainly pushing to the downside. As John O'Donnell would say, this thing is now a bug in search of a windshield. Well, where would that windshield be? Some would argue that it's this rally-based rally point right here on 75, but we already broke through that. So you're going to have to start looking down here at these lower levels, down around 68,000. And I don't think that that's going to be a challenge for us to get down to 68,000. That seems like it's a very real possibility. That would just simply be this low point here from back in November. After that, it's a bigger question of, do we see any real significant demand zones that might push price back up? And I really don't. I don't see anything here that's that great. Maybe something around 54. If that's the case, then ultimately you're looking at a low point around $40,000. Now, I don't want it to get there. I really hope that it doesn't, but it would not surprise me to see the institutions push this narrative of weakness, precipitate it to the downside, and keep on pushing till it washes everybody out, and then they'll buy it back up. I don't think Bitcoin is going away. I still am in the camp that I think that it does have a significant market value, not just to retailers who want to have their the privacy and control over their own money, but also from a financial institution perspective, there's a lot of money in the transactions of Bitcoin, and they want to capitalize on that. So there we go. We need some timely tweets. Yeah, I'll get to that in just a sec. Do you think the price is going down because of the bank issued stablecoins? No, they're not issuing stablecoins yet. They're in the application process to issue stablecoins. Personally, Dan, I think that when we get the issuance of stablecoins, it'll be a good thing. So let me talk about the drop first, and then we'll go and shift over to what might be the catalyst to save it from dropping further. Now, as many of you have mentioned, I thought this time was going to be different, and so far I've been proven completely wrong on it, and that's okay. My crypto portfolio, as you guys know, is a non-touch. I'm not worried about it. If anything, I'll be adding to it at these much lower levels. My concern is that this institutional manipulation, which I think is part of the reason we're seeing this sell-off, is starting to trigger cascading what are called liquidation prices. So because it's so transparent, because Bitcoin's blockchain is completely transparent, you can go look at the data and see how many leveraged short Bitcoin positions there are at any moment in time. What will happen is if there's a lot of leveraged long positions, that means if you're taking, let's say, one Bitcoin, and I now may be able to control 100 Bitcoin using leverage on DeFi marketplaces. So let's say I got one Bitcoin, and I'm now using a ton of leverage to bet that it's going to go to the upside. Somebody with more power and more wealth and more Bitcoin and money can look at that blockchain and say, okay, here's an individual who's leveraged 100 to 1, and we can see their liquidation price. So all I have to do is do a big sell order, cause a real sharp drop in Bitcoin, and this individual, not even by choice, but by systemic liquidation, the computer automatically will liquidate their position and sell it at market. Now, I can do a couple of different things as an institution. I can hit those people's essentially stop loss, right? It's a forced liquidation. But I can also make sure that my bid price to buy is much lower, so when that individual is forced liquidated, the spread might be very wide, and all of a sudden they get a horrible fill out of it. Total manipulation. I think that that's part of what's going on is liquidation hunting, people going after these leverage longs. And, only really in the past 6 months, I think, have you seen really heavy usage of liquidations and targeting liquidated longs. I watched a couple of videos on some guys that do that for a living, that their whole job is to target liquidation prices and trigger those liquidations. And they use what's called flash loans. So let me, this is kind of an advanced topic here, but just hopefully this doesn't blow too many people's minds. A flash loan is a loan of colossal size, right? It could be $1 billion loan. But the loan has to be paid back within one block time, right? That's technically how flash loans work. So what will happen is Bitcoin's block time is 10 minutes. So what someone could do is they could wait, and as soon as a Bitcoin block is created, immediately get this flash loan, sell a monumental amount of Bitcoin, cause it to spike down, trigger a bunch of liquidations, trigger people panicking, trigger selling, and then buy right back within the block. That's a 10-minute window of time they have to cover that loan. So they can do this and just flash these flash loans, hit the market with them, push prices down significantly, buy it right back up. And they'll do that all day long. And I think that's another piece of what's happening here is these flash loans are pushing prices down because volume has been definitely higher than normal. And we're seeing consistent downside movement in here. I mean, just the move from a couple weeks ago, I'll bring up the that high point that we saw back on January 14th, where it's like, I said, it's starting to look a little bit better. We're starting to make some higher highs, but, we're not out of the woods yet. Since then, we've fallen 26.6%. That's real bad in a very short window of time. And of course, that's impacting me on many different ways. What level do you like to start buying again? I'm thinking, around 50K. If it gets down to 50K, I'll definitely be considering buying. And to be fair here, Away, is 50K the low? Is that the bottom? Not necessarily. I mean, this can go lower, but as I've mentioned many times, and I mentioned this on Marshall's program today, regulation to me is the piece that's missing. And our politicians can't come to an agreement on the Clarity Act, and maybe I'll do a show on what the details of the Clarity Act as to why they can't resolve and get this thing done. I think the moment that the Clarity Act is done and signed into law, you're going to see a big surge up in crypto. Now, that is, Trump's going to sign it no matter what. If it passes the Senate, he's going to sign that thing, because the sooner he signs that, the more it's going to benefit him and his holdings and his family and all his different companies attached to it. So to me, very important. The problem that we're getting with this Clarity Act is one of the provisions is that these stablecoins cannot pay interest out. And I've already covered this with you guys, but let's understand why this is so significant. Circle, which is the creator of USDC, which is backed by Coinbase and many others, they're earning about 3.5% yield on that stablecoin. Coinbase pays it to you. So they're incentivizing you to keep your money at Coinbase and use Coinbase One so you can make about 3.5%. You cannot get 3.5% in a normal savings account at Chase, Wells Fargo, Bank of America. Those banks won't pay you that. So they're concerned that by issuing these stable coins and allowing them to pay the interest to customers, it will destroy their business. Which, it will, right? I think we'd all agree it probably will do serious damage to banking, especially if there is insurance on stablecoins. Now, essentially, a stablecoin is a money market fund. What's a money market fund? It's taking your dollars and buying treasuries with it, short-term securities, or keeping it in a savings account, locking it into CDs, and giving you the interest that sequence of holdings bears. If we get to the Clarity Act, through the Clarity Act, stablecoins may, big may, get FDIC protection because it could be considered a cash deposit since it's holding cash, repo market, and treasuries, or SIPC insurance. And I'm pretty sure that everyone in the room would agree with me that if you have a Chase savings account paying you 0.01% that is insured, or you could get a stablecoin that will pay you 3.5% that's insured, they're both insured and one pays you 3.5% and one pays you 0.01%. Would you keep your money at Chase? No, you wouldn't. Some people still would be fearful and they would stay at Chase, but those who understand that you're protected would move over to stablecoins at Coinbase or whoever's going to issue that stablecoin. So when we get the Clarity Act finalized, that will establish those parameters and what can be done. Look, I don't want to keep my money in a bank, period. I don't trust my bank. I don't trust Chase. I definitely don't trust Chase or Wells Fargo or Bank of America. I've found mistakes before. I just don't like them, especially the fact that they could freeze my accounts at any moment. Stable coins, they can do the same thing. They can freeze your account, but at least give me the interest, right? So this is one of the big stopping points. The other piece, which I mentioned today on Marshall's program, was when you have crypto in your accounts, there's always the threat that they can freeze it and take it. Well, the truth is, with this device here, which you're having on a ledger, they can't freeze it, they can't take it. They can prevent me from accessing the market, but I could find a market around the world where I could get my money out. I'm paranoid of a bank holiday. I'm paranoid of a run on the bank. Since there's no reserve requirement today for banks, I'm concerned about a run on the bank. And all it would take is one major influencer to say, hey, everybody, pick your, number one influencer. If Elon Musk came out yesterday, Elon Musk could break the entire financial system tomorrow. All he'd have to say is, on a tweet, guys, your money's not safe in your bank. I would encourage all of you to close your bank accounts tomorrow. If he did that, man, the chaos that would ensue, because there's a lot of people that would follow what he said and go and close their bank accounts right away. The more that happens, the more likely banks will stop. The media will tell you that the bank's closed on the day, which freaks you out. You'll go down the next day, and all of a sudden, we have a run on our bank. So, yeah, you should be paranoid of banks. Anyway, to Thomas's question, can you imagine, Noam? Can you imagine if Elon Musk tweeted that out? He would probably get thrown in jail for some crazy act or assassinated, because he would create a financial catastrophe in America. If everyone took their money out of the banks, we would be done. It'd be, we would recover at some point, but it'd be like the Great Depression. Because I know that if I read the news today and said, hey, Chase Bank is freezing assets, get your money out now, I'd stop the show right now. I would drive over there and I would get my money out immediately, or as soon as I could. And I know there'd be thousands of other people where I live doing the same thing. I'm sure where you live, you'd be doing the same thing. Yeah, it would be a wild sequence of events. And would you guys say that scenario is outside of possibility, an impossibility for that to happen? Actually, how about this? On a spectrum of 0, meaning no chance in hell, or 100, meaning it's guaranteed to happen, where do you think that is plausible? What percentage would you give that one? That somebody creates a run on the bank? Certainly, Marcia, it's possible. There's no doubting that it's possible. Calling out, Mickey, he says calling out fire without fire is illegal. True, but this wouldn't be calling fire, right? This would be just saying, hey, get your money out of the bank. That's not yelling fire. That's telling people to take their money out of the banks. Noam says 35. Steve says 20. It would not surprise you. See these flash mobs where people get together, and they used to be flash mob was like they do a cool dance routine or something. They all do Thriller in front of the Embarcadero in San Francisco, or they do a flash mob and they'll rob a store. Get 600 people to just run into a store and grab everything. It wouldn't take that much to get a bunch of people to start that. Liz says less than 5%. Yeah, I think what would happen, for me, it would probably be down around that. As far as happening, maybe 10% or less. It's definitely possible, but what would happen is the banks would probably respond to it fairly early and close down. They would get emergency loans from the Fed just to make sure everything was okay. But if there's enough demand from people, if there's enough demand from the American citizens to close their accounts, there won't be enough money to send to those banks overnight to cover it for a while. Part of me would love to see it happen, right? I don't keep a lot of money in my bank for that reason. I don't trust the bank. I keep the bare minimum in the bank. I keep everything else in investment accounts or crypto or other areas. The people are so divided, only half would follow. Actually, yeah, that's true. That's true, Dan. But I think even if you are a hardcore ultra-conservative or an ultra-liberal or find yourself as a moderate, whichever spectrum you fall in, money is a universal pain point. So if you opened up the news today and you went to Yahoo Finance or Bloomberg, or you logged into CNBC and Jim Cramer is talking about how, no, the banks are fine. Don't worry, the banks are fine. Right? He said that about Bear Stearns. He said that. What did he say? You're an idiot. Bear Stearns is fine. There's nothing to worry about. And Bear Stearns went bankrupt like a week later. So it could happen. I don't know how I got on that topic, by the way. That was a random squirrel. Look at that. Rabbit hole. Anyway. Let's go to Thomas's. I do think that Bitcoin has a bit further to drop, but I don't think we're going all the way down to 37. I don't think we're going all the way down to 37. I really hope we don't. I think that's going to create a lot of problems. There was a question that came through chat earlier about Microstrategy, MSTR. And at what point does this make them insolvent? I have the 124 puts on Microstrategy. It's not looking good. Those expire Friday. I did not buy... I did not buy puts on this. I sold puts at 124, and not a good day for it. We'll see what happens by Friday because it actually broke down below 124 today. I did buy puts on my Coinbase and on my Tesla just to protect myself. Since Tesla's the one I'm more concerned with. I have a pretty big exposure there, but we're okay for now. So yeah, I do think this could potentially put MicroStrategy in a liquidation problem. Does it go bankrupt? Maybe not yet. But I do think that it has a liquidation issue facing it, that if it continues to fall, that their price, they may be forced to liquidate. I think we looked at it yesterday, didn't we? Was it 72,000? I can't remember exactly what Michael Saylor's strike price was, but he literally posted, here's our average price. Honestly, if I'm Michael Saylor, I don't know if I want to do that. That's just too much transparency, and now it becomes a target. So let's go, and I'm going to scroll through here without torturing you guys to see it. There you go. So MicroStrategy right now has their average price is $76,052 per Bitcoin. So they have a total. I'm going to do up a calculator right here, and I'm going to do 713,000 Bitcoin, 502. All right, so 713,502. The current price of Bitcoin is, let's go up because it changes so dang fast, 73.2, and their average price is 76. So they're down $2,900 per Bitcoin, right? Not a huge amount, but $2,900 per Bitcoin means that right now Microstrategy is at a $2 billion loss. $2 billion. And I know there's a lot of people like, well, they've got cash. They got cash to cover it. That's not the point. The point is they're responsible for the 5 different interest-bearing products that they have, Strike and Strip and Stram, whatever all those different ones are. There's a lot of the obligations they have to make. And yes, that couple $1 billion could fund operations for a while, but the more that Bitcoin drops, the more precarious it becomes for them. I mean, every $1,000 that this thing drops, it's costing them $713 million. $713 million every $1,000 that it drops per day. At a certain point, that will come into play because, as I mentioned yesterday's show and many times in the past, a couple years back, they issued bonds, and those bonds were collateralized with Bitcoin. They took their Bitcoin holdings, used that as collateral. So if it gets below that, they will be forced to liquidate. Now, they'll probably take some cash, try to buy some Bitcoin or prop up Bitcoin's price, but keep your eyes on MSTR. I mean, this could be the story of the year if this does implode. If what does it take? Does Bitcoin have to get to 60,000 before this thing absolutely melts? I mean, that's certainly a possibility. I mean, we're at a point right now where you kind of breathe a little bit of sigh of relief and say, okay, well, it should bounce right around here somewhere. But if Bitcoin keeps falling, MicroStrategy falls even more, and then they'll be forced to liquidate. So yeah, it's wild. It's very interesting times. After this trade closes on Friday, I will probably not touch MicroStrategy for a while because, again, if Bitcoin does continue to fall, this could implode. If anything, I might actually switch and start buying puts. I would normally pride myself on being a put seller because I like collecting premium, and the premiums are so good on this. But I might be actually sell. I make you buy puts. Lisa says, "What about the Super Bowl ad thoughts?" Oh, this is gonna be great. It's gonna be absolutely fantastic. So, you guys know I use ChatGPT. I'm actually about to switch away from ChatGPT because I don't know. I'm not a fan of the guy of Sam Altman. I don't like Sam Altman. I think he's a shady guy. I think he actually was involved in that murder of one of the developers in San Francisco, and he's covering that up. You look at all the evidence, it's like, how come this wasn't investigated? Because guy's got billions of dollars he can throw around to law officials to get it hidden. I'm not a big fan of Sam Altman. The big ads this weekend are going to be all around AI and crypto. Has anybody seen the ads for Anthropic? Have you seen the Anthropic ads? They're attacking ChatGPT. They're so good. They're so good. So you agree with Elon, Merlin? I agree with several different investigative journalists who kind of point the finger. I don't think that Sam Altman pulled the trigger or did it. I think that he had a hand in it. Gemini is the best anyway. I may actually switch over to Claude. So has anybody seen the new Claude ads? Claude ads? I'm going to see if I can post them out. They were so good. Somebody posted all 4 of them that are going to run during the Super Bowl. It's worth checking out now. They are so just fantastic. And basically it's like this. There's a kid and he's doing pull-ups, right? He's doing pull-ups. And he lets go of the pull-up bar and he looks at there's a really big, personal trainer next to him. Big guy, all muscular, just jacked. And he turns to the guy, he goes, "Hey, can you help me get a six-pack as soon as possible?" And the personal trainer thinks for a second. He goes, "That's a great question. Sure, I can build a plan for you to get your six-pack in a short period of time. Would you like me to start?" Kid's like, "Yeah, that'd be great." So, okay, well, I'm going to build you a personal workout routine, and we'll do diet, nutrition, all this exercise as well. And then, would you like me to do that now? Yes. Okay. I can do that for you. Let me get right on that. And by the way, you should think about taking vitamin supplements like On Nutrition Protein. It's basically incorporating ads into ChatGPT. It is hilarious looking at those ads. So just type in Perplexity ads on Twitter or something. They are so good. There's 4 of them. Every one of them made me laugh out loud. They're absolutely fantastic, and they're targeting ChatGPT, who's going to be running ads in their platform coming up here soon. I think you're going to see Perplexity AI go after ChatGPT. I think you're going to have ChatGPT try to convince you to use ChatGPT. I think Coinbase is going to run a huge amount of ads against the banking system. That's the one I'm most interested in. And I haven't seen anything or heard anything about Coinbase running ads, but I think that that's going to be the highlight for me, be watching what Coinbase does to go after the banking system. As far as the football game itself, look, I will win more money if New England wins it, but I think that the Seattle Seahawks are a far better team. I think that they are a better team, and they will probably, their defense is just incredible. I think they're gonna end up winning it. So anyway, it should be a good game. I really won't be watching much of it. I'll be having more fun. Teddy says that sounds like a Black Mirror episode. Totally does. It totally does, and it may end up being a Black Mirror episode. All right, so I've gotten one question out of the way from Thomas, which is, I think we are going down further. Definitely. Number 2 was, what's your target for Bitcoin now? Scott, I think we're probably looking at 54,000. As much as I hate to say it, it's just the trend is your friend till the bend at the end. And when I look at this trend right here on Bitcoin, let me bring up BTC. You know, if the trend is your friend until the bend at the end, it's pretty clear there's no bend right now. As a matter of fact, I see acceleration. Let me get rid of some of these lines. I can get rid of a lot of this stuff. I see moves accelerating right here. And if we go back to a weekly time frame to make this a little bit clearer, kind of got to go back and see where we've come from. That 54,000 mark is going to be the low point here from September of last year. After that, 40,000 could be in play, and I really don't want to see that. But it's not my job to say what I want or don't want. It's just follow what the market gives me. Now, if you are holding Bitcoins, it sounds like Thomas is. I think we talked about this the other day. You could hedge your position by buying puts on IBIT. Or you could actually, buying directional puts on IBIT. You could short Bitcoin futures just as a hedge if you think it's going to be going down more to protect yourself. This is something you could do. Now, what was the last one? And feel free to type in your comments in the chat, guys. You've been doing great. This is from Gene. He says, is now a good time to buy Ethereum or Solana? Well, based off that, no. Teddy says, or you could buy BITI. Is that the inverse? The only issue I'd have with this is liquidity. So when you're buying leveraged, the problem here, Teddy, with leverage instruments going counter, is it's using derivatives, and there's always some kind of decay with derivatives. Whether it's contango or backwardation or option rollover events, there's decay here. It won't follow negative 1-to-1. So this is ProShare short. So I'm assuming this is short 1-to-1. I would not actually encourage you to go long BITI. I'd rather you short IBIT. IBIT has more liquidity. IBIT has, I don't know if the fees are, I'm going to assume the fees are lower, but I don't like holding long-term leverage instruments. And I can do so much math on here to show you why it's a bad idea to hold even 1-to-1. This is a 1-to-1 inverse. It's not 1-to-1. Let's see how long this thing has been around. If it's been around since July of 2020, really been that long? That doesn't seem right. But okay, let me add on here. Let's just throw on top of this, we'll throw IBIT. These should be the exact inverse relationship here. So let's go back. And if you start from March 1st, okay, IBIT is up, how much is IBIT up? 5.53%. That means that the inverse should be down 5.53%, right? If the normal ETF that holds Bitcoin long is up 5.53, then the inverse should be down 5.53%, right, Teddy? Well, look what BITI is. BITI is negative 26%. That's not 1-to-1. That's way worse. Way, way, way worse. So there's the reason why you don't want to do that. So yeah, don't buy IBIT, or don't buy BITI as a hedge. Short IBIT. You won't be subject to the time decay. Dividends skewed as well. Yes, there is the dividends fact. There is the options rollover. There is futures, depending on how this one's constructed. They're all different. But time decay on anything leveraged is a bad, bad, bad idea. The longer you hold it, the worse it becomes. But yes, dividends do skew that. You're right. All right, let's get rid of that bad boy. So for Gene, look, I'm a believer that Bitcoin is the ocean. And as they say, a rising tide floats all boats. Well, right now, it's going out. Tide's going out, and it's going to take everything with it. I think what will happen is almost every altcoin which is anything other than Bitcoin, is going to have a more exaggerated down move than Bitcoin. So if Bitcoin drops, let's say 20%, I think you'll see, Ethereum and Solana and Cardano, drop. If Bitcoin drops 20%, they'll drop 25, 30, maybe 40%. And you can check that by looking at Bitcoin's dominance. So Bitcoin's been in a total free fall, but their dominance is actually going up for the past, few months. It's actually been going up. It was, down here in September, it was only 58% of the market cap of all crypto was Bitcoin. Well, today it's 59.4. So even though Bitcoin is tanking, everything else against it's doing worse. So based off of that statement there, Gene, if you believe, as I do, that Bitcoin will most likely, higher probability, I would say probably 65, 70% probability, we're going to continue moving down because that's the direction it's going, then that means that Ethereum and Solana and Cardano and Algorand and Storagecoin and Cosmos and Tron are probably all going to have more exaggerated moves to the downside. So in a nutshell, no. I would say now is not the time to buy Ethereum or Solana. Let me bring those up for you here so you can check them out. Here's ETH. Right, Ethereum, man, it was $4,800 back in July of last year, or actually August. It was over $4,800. It was almost $5,000. $4,995, and today it's $21. We're down over 50% from its high. That's way more than Bitcoin is down. Based off what I see here, it looks like Ethereum's going down to 1,500. And I hate to say it because it's my second largest position, but it is what it is. Solana, let's go to SOL. They may have to change their name. SOL has a lot of different meanings depending on how politically correct you want to be, but they might be SOL right now. They broke down below that level of $95.16, which I had drawn on here as a kind of a low point base. Well, we've closed below it. We're at 91.83 right now, and there's a couple little demand zones lower. The next immediate stopping point for Solana is at $85, between 85 and 78. We're very close to that. Another $7-8 will be in the middle of that zone. So I don't know. I don't think now's the time to buy crypto, period. I think if anything, you start to allocate some money towards a cash pile and you say, all right, I'm going to wait a couple weeks, maybe a few months, and see where things go. But for now, it does look like you're going to get more downside movement here for sure. Mike Mo says, what about ETH A? Love it. Love ETH A. ETH A is just like IBIT, but ETH A is Ethereum by BlackRock. It's BlackRock's Ethereum ETF. It's the second most liquid ETF we have out there for crypto. So yeah, if you want to short Ethereum, then short ETH A. Teddy says $1,500. Oi, for which one? Oh, for Ethereum. Hey, look, I'm not trying to be a doom and gloom. It's just look what the price trajectory is, right? I'm not trying to candy coat things or speak a bunch of BS. It's what's the truth. The truth is we are below the low on Ethereum from June of 2025. We are now, well, we haven't closed below, but we're just below that low. So you got to find yourself the next possible stopping point. And from my perspective, it's between 1,600. You can see that yellow box at the bottom. Between 1,600 and 1,380. I say this unemotionally because I can't have emotions get into it, right? Obviously, if it falls from 2,100 down to 1,500, I'm going to lose an extra $600 per ETH. Now, could I go and sell or buy puts on ETH A or short ETH A, the ETF? Certainly I could. I absolutely could. But my long-term account, I'm not worried about it. It will just do what it does. Sorry, Steve. That's a good one. I'll read it for the podcasters. Steve says, I would feel better if you would just lie to me. Not my MO, man. I speak it as I see it, whether it's good or bad. And unfortunately, the crypto space is looking real ugly right now. And I don't know how much of this is just straight up manipulation. I don't know how much of this is actual fear and panic and, foreshadowing that there may not be as much implementation of crypto as I thought. I think that has a lot more to do with uncertainty and just rolling out because of the stalling of government, right? We're seeing they should have signed this Clarity Act into law already. But as you guys all know, you'll have one side of the aisle say, we need to sign this, and if you don't, you're a bunch of idiots and you're the one that's causing the problem. And the other side of the aisle will say, yeah, we'll absolutely sign it, but we want you to do this and this and this and this and this before we sign anything. So it's this petty bickering that, from my opinion, doesn't really benefit doesn't benefit us as a country. It's just what it is. Teddy says, Google getting the whipsaw on earnings. Yeah, we can talk about that here in just a second. Let me just make sure I get everybody's questions answered on crypto. So, Gene, no, I do not think now is a good time to buy Ethereum or Solana. I think that if you have a perspective of, let's say, the next 10 years, then, buying ETH at 2100 is probably fine. That would be today. Doesn't mean you need to wait till 1600. Look, in a perfect world, it bottoms today and ETH never gets below 2136 for the rest of all eternity, right? That's a perfect scenario for me. But just looking at the trend here, it does feel like it's going to be going lower. Therefore, I would ask you, Gene, what's your time horizon? If you're looking to make a short-term swing trade, no, you're not buying now. If you're thinking, let's wait, I'm going to buy Ethereum and wait 5 years, then buy some today. You buy some today. If you have a very long-term time perspective, because you're buying at over 50% discount off the all-time highs, and over time, I think Ethereum will probably do well and recoup those losses. But for right now, crypto's fallen out of favor. Steven says Trump boys must be getting, they're getting smoked, watching their portfolio and wealth just disappear. Merlin, do you think a black swan is near in the future? Well, remember, Chio, with the black swan event, you don't know what it is until it hits you, right? I can come up with crazy hypothesis about what I think is going to happen in black swan events. I mentioned when we were in, India or Downey. I did an event with Trading Academy in Downey, and you were there. And someone asked me, actually, a gentleman in the audience asked me what my, I think it was Mike, asked me what my black swan scenario was. And I think we're kind of settled now on one of those, which is the Taiwan semiconductor war, World War III over around Taiwan and chips. I think that the black swan event is MicroStrategy. I really do. I think MicroStrategy is your black swan event. It would be interesting if it did happen, because I've been saying this for well over a year now, that there's a big dark cloud looming of questions of how they're actually holding their Bitcoin. I would much rather see him point to a web address or a blockchain address where his Bitcoin is to prove that he actually does own it. At this point, it's all fractional reserve lending, and just like a run on the bank, that can cause it. Right now, when you look at the price of crypto, everybody tell me, if this is the bank, would you say that there's a run on the bank right now? If we're looking at this price chart of Bitcoin here, would you say that's a run on the bank? I think you guys would look at that and say, yeah, it looks like the starting of one. It's a pretty dramatic move. And if it keeps on running, if people keep getting freaked out, again, just watching the number of emails that have come to me about Bitcoin and how they're freaking out about crypto, it feels like a run of the bank. People are probably unloading their crypto because they're hearing all the headlines now. That could cause this further. Yes, Lisa says, you say that about MicroStrategy, but you still trade it. Yeah, I do. And hopefully, I know that word's bad, Lisa, hopefully when this all falls apart, I will have no exposure to MicroStrategy, which is why I told you, after this Friday, I'll probably stop trading MicroStrategy, just because it feels like we're getting to that point where if the tide does go out far enough, I think the evidence will show that MicroStrategy doesn't have all the crypto they say they have, or the locations that have told them that they have the crypto don't have that crypto, like Coinbase, like Fidelity and other custodians. Yeah. So hopefully it stays above water for another couple weeks. Again, I think that Coinbase is probably going to have a big pop on Monday because of their ads, but who knows? Right now, I'm in an underwater position on Coinbase. You can see here, Coinbase just imploded the last 3 days. I did not expect that to happen, but here we are on a pretty significant down day and still going down in the after-hour session. So I had to buy protection to protect myself there. An extra couple thousand outlay to make sure that the downside's protected was worth it. Yep, 5% a day. Wild, right? I mean, that should be a sign. Today was 3%. It's down another 1.37 in the after-hour session. So, not good. Not good. This one I did not buy puts today. I probably should have. I did on Tesla and Coinbase. But anyway. So, what was that question I was going to get to? What about the naysayers preaching against Bitcoin? Are they causing the selling? No, I don't think that they're causing the selling. Most of the naysayers are irrelevant in the whole grand scheme of things. They're not doing anything. The naysayers aren't actually shorting the market. I think it's more institutional manipulation. If I'm I'll tell you this. I don't know if I could with a good moral compass do this, but inside the walls of these major financial firms where they have billions of dollars to throw around and they have a trading desk, would not surprise me at all to see collusion going on where somebody from JP Morgan calls up Goldman Sachs, calls up BlackRock and says, hey, look guys, I'm going to take 50 million of capital and I'm going to just start dumping Bitcoin. You with me? You got all three with me? So now we're at 150. And we will work together and just start unloading Bitcoin. Because if we all dump our $50 million, that's $150 million worth of Bitcoin being dumped. We might do that with leverage to cause more of an exaggerated shock in the market. We know that will trigger more and more selling. Then I can go to my firm and say, hey, issue a negative report on Bitcoin today. All of our customers will get this letter, an urgent thing saying, hey, be careful with Bitcoin. We think it's going to be going down. We already caused it to go down a lot. Those customers who hold Bitcoin, they freak out. They go and sell their Bitcoin, and then we end up buying back at lower levels. It is the classic, not pump and dump, but it's dump and pump, but done by people who have massive amounts of money. And because you can use the DeFi marketplaces, they can actually get away with it somewhat anonymous. Yes, DeFi will allow you to do that. So there we go. Let's see. Investors start unloading MicroStrategy in panic. Yes. I believe so, Patel. I believe that if MicroStrategy gets some kind of alert that MicroStrategy might be going under, then shareholders will dump the price of MicroStrategy, causing their price to go down, and that removes a lot of their leverage. Right? Part of the leverage that they're allowed to borrow against is by using their share price. They use their share price to have a higher share price to issue new stock or issue new shares and more money that way. Plus, it gives them higher valuation. If their valuation drops significantly, who's going to loan them money when your market cap used to be, I'm making up a number, let's say your market cap was $50 billion and now your market cap is $20 billion. Your loans just got a lot smaller. So you won't be able to borrow enough money to prop up the market. So yeah, definitely could be a problem. Let's see. Done at lunch, countries all over. So glad I sold my coin at 197. Yeah, we'll see. See if I'm in trouble this one. Will CNBC ever stop putting Tom Lee on their show? No. He's eye candy. People love Tom Lee. But has he ever said anything bad about crypto? No. The truth is you need to be a realist in this. And he has an agenda. His agenda is he needs buyers for crypto. I mean, look at BMNR. I've been telling people to stay away from this damn thing, but here's BMNR. It was down 10% today. I love when John O'Donnell used to use this phrase with me. He says, this is a bug in search of a windshield. Someone a couple days ago asked if they should buy BMNR, and it's like, no. Stay away from this thing. It looks like it's going much slower. Yeah, why bother? Mike Mo says that's exactly what they do. When you watch the movies, they're telling you, oh yeah, absolutely. The Wizard of Oz, it's all about what was behind that curtain and the magic that they wield. I was very fortunate in my trading career to go and work on an institutional trading floor. I normally don't mention the name, whatever, here we go. I got to go work on the floor of a major market maker called Southwest Securities. I was one of the top traders on my floor from a volume perspective. So they invited us over and brought us behind the scenes. And when you go behind that, I mean, it was like a security nightmare to get to this, I think it was 7th floor building in Dallas. Once you get behind all that, it's the boiler room type stuff you see in all these movies. It's very orchestrated. It's a good old boys club, and they are manipulating prices. They're moving prices. They're colluding with other banks and financial firms. I asked the guy specifically, so I think I've told you this before, when you're in a position with someone who is, they're guarding information and going to be tight-lipped about anything, my philosophy is just pretend like you're an idiot. Just be really stupid. So I asked dumb questions, right? It was embarrassing to me to ask such stupid questions because I knew they were dumb, but I wanted the person to just go like, this guy's an idiot. He's not going to figure anything out. So I asked him about, do they communicate with other market makers? And the guy tells me, he says, no, we don't call any other market makers because, institutions do this and this and this. And we have, he goes, all of our phone lines are recorded and sent to the SEC, which I don't know if I believe that. And while he's doing that, he's got a screen open on the side and he's chatting with a guy whose symbol was GSCO, which is Goldman Sachs. And basically he's got the trading desk at Goldman Sachs on a Yahoo chat, Yahoo Messenger thing. So yeah, they do communicate. They talk to each other. They're manipulating prices. They're moving prices. Remember, we are nothing more than a mosquito in the grand scheme of things. Don't ever fool yourself and think you're going to be the lion or the elephant in the trading world. It's not going to happen. You are a very, 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 very small piece of it. That doesn't mean you can't make money trading, right? Just know that there are forces that are so much more powerful than you are. They can ruin your day in a snap of the fingers. That's true, Dan. He did not call him. He did not call him. Now it's signal chats and encrypted rooms. Yep, you know it, VB. You know it. The times have changed. That was back in 2000. No, I'm not a big boss, man. I'm a mosquito. I just try to get mine, get in, get out, and hopefully don't get hurt along the way. Every now and again, a greedy mosquito gets swatted. Our goal is to not be the greedy mosquito. All right, you guys have been very chatty today. There was another question I was getting into, but I forgot what that one was. There were a bunch of questions that came through today. Okay, so I got our 3 questions answered. Let me go back through and I'll run through our top 8 here. We're going to talk about Google, sure. So let's go look at Goog. Alphabet. So here's Google. Surprisingly down 2%. Their earnings were actually pretty good. I'll take this a 5-minute. I did not have a chance to take the earnings. I wrote them all down, but I didn't have a chance to put them into a spreadsheet for you. So bear with me as I read through them. You can see the big whipsaw here in the after-hour session. Their revenue came out at $113.4 billion versus expectations of $111. So they beat on revenue. Their earnings per share $2.82 versus $2.65. So they beat on revenue, they beat on earnings. Their cloud storage was way more. They made $1.5 billion more on cloud computing than they thought and anticipated. That's phenomenal. The piece that was really interesting was how much money Google is going to spend on CapEx, mainly AI. It was $180 billion is their forecast. And the expectations were $119 billion. So they are like $61 billion more. There were 50% more than the analysts had expected on CapEx spending primarily for AI. And I think that's, right now you're looking at the price and people are trying to figure out what does that mean, right? If you're Google and you're spending so much money on AI, that's great, but what does this mean to a shareholder? Does that extra, $61 billion that you're spending on AI above expectations, is that going to yield me direct profit? I mean, what does the face of Google look like at the end of the year with all that money coming in? And I think that's what's going on right now. Their numbers were great, by the way. I mean, their numbers absolutely fantastic. We can look at the daily time frame here. The chart has a weakness over the past couple days, that's for sure. But all in all, Google still is one of the best out there. And you can see this little blue line. I'll move this line up here. We are currently right where the dash red line is in the after-hours session. So it's down, but not that bad. I'm not going to touch Google tomorrow because I like when there's more exaggerated moves up or down. Google is relatively unchanged. It's just down 2.32%. That's not that big of a deal. Steve says in the short term it may hurt, but long term Google is a juggernaut. I agree. And that spending, you got to ask yourself another question, which is, well, where do we think that money's going to go? Probably not NVIDIA. They've already talked about how they've got enough NVIDIA, but they're trying to get people onto their own server, their own chips, their own custom designed products. They're not NVIDIA. They do have a bunch of NVIDIA, but they're trying to migrate people onto their own, which gives them better profit margins. So we'll see how that goes going forward. That means a lot more infrastructure. Does it mean they're going to be out buying more data centers, buying a crypto miner and converting their operations into an AI data hub? I mean, right now, the big question I have is, where's all this energy going to come from? And we've had this discussion before, and I'm not an energy expert, but China is producing and building so much more energy facilities, whether it's solar or nuclear or whatever. We are way, 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 way behind. And we need to catch up because if we want to be the AI leader, we need a lot of power, and we just don't have it. I am already expecting my energy bill to start creeping up more and more and more than it has over the past few years. Probably will. So Qualcomm took a bath. I did not look at Qualcomm today. Down 10% in the after hours. It was already... I love stuff like this. Like, did someone know? I mean, it's been selling off since January 8th. It was up around 183, 184. And now you're at 148. After hours are down at 135 on earnings. I'll bring you the 5-minute here so you can see that one. Woo! Man, there's your popcorn trader there. That's a pretty good one. Got a little 9% drop in there for Qualcomm on their earnings. Now, I didn't see anything about the earnings to know exactly what was causing that. But, yeah, ugly move. Oh, the beauty of the markets. You just never know what is going to happen. Solar energy on the roofs, install some. Yeah, I I think we should take it one step further. You know, if you're the state of Nevada, Holland has these really cool panels that they use for bicycles, and their bike paths are solar. Not all of them, but they have bike paths that are solar, and that bike path just sits there and collects energy. Well, I was talking about I-5, the interstate here. Why not have the I-5, the entire I-5? You know, it's a 4-lane for most of it, from Southern California, Mexican border, all the way to the Washington State, Canadian border. Why don't we have that all solar? I mean, why can't we do that? It seems like we should have the technology to build that infrastructure, but for some reason, it ain't happening. And we have a lot of roads that go through Nevada. The entire state of Nevada gets like so much sunshine. It's a desert. Well, let's put solar collectors out there. Why not? Yeah. Rob says the roofs, but what about roads? All right. Give big discounts to it. We shall see. You got a solar roof. You got Avgo. Broadcom. It's hard for me to call this thing Avgo because it's always been Broadcom, but you're up 6% in the after-hour session. Great. After a pretty ugly couple of days. It still looks weak, though, from this Broadcom perspective, right? Man, just lower lows, lower highs. Not looking very good. All right, let me show you economic calendar here. I don't even have it up. Let's go to... Tomorrow is actually a good day for earnings. We have Amazon reporting after market hours tomorrow. From an economic perspective, you can see we've got a rate announcement for the British pound. That's going to happen Thursday. 3.75% is expected to be where it's at. You also have a euro rate announcement, and they're expected to stay at 2.15%. For the U.S., we have our jobless claims. The data that came out today was not good. It was real bad. The ADP non-farm employment change, this is dismal. I'll zoom in here so we can see that, but there's the trend is your friend till the bend at the end, and we're expecting an increase in ADP non-farm employment change. It was a decrease to 22. That's 22,000 new jobs created, and the number's getting lower and lower and lower. Not a good sign. So that's pretty much it for today. I'm going to try to bounce before I get to a 1-hour show. Again, the big name for tomorrow is going to be Amazon after hours. There are a couple other names which I might be able to spout off here just before I decide to bail on you guys. Let's see. Here's your earnings calendar for mañana with my stupid ad in the place. This is today. There we go. Amazon, you got Shell, Sony as well, but pretty much it's all about Amazon for tomorrow and their earnings. So that's gonna do it. I got the tickle, Dan. I got the tickle in my throat. I was trying to fight the cough, so I had no coughs today. But anyway, hope you guys have a fantastic remainder of your day. If you have questions, something you want me to jump on for tomorrow's show, let me know. You can email me at tradermerlin@gmail.com. Thank you, Gene, Scott, and Thomas for the questions. Always love when those ones come in. Hope it helped. And if you have more, send them on in so I can get to them on tomorrow's show. Take care, everybody. See you tomorrow.